Hello everyone. In this lecture, we are going to discuss about that how do we calculate the PGBP income. Now, this section number 25 actually defines the process or the procedure in which the income from business and profession is to be computed. Now, this actually is a specified procedure which we need to follow. So, first of all, we have to do the calculations as per the P&L account. Okay, the profit which is available as per the P&L account. So because we are doing the business and profession income, so obviously business has their books of accounts, right? Now with the help of those book of accounts, whatever profit as per P&L account is given, from that we actually start doing our calculation. Now let me just give you a specimen that how we actually do it. Now, supposingly this is a P&L account of a firm, right? On the debit side, we have all the expenses, and actually we have a lot of expenses, and we have the gross profit brought down, and we have certain other incomes also, right? So whenever we subtract all the expenses from the incomes, we actually arrive at the net profit. Fine. But this is the format as per the P&L account. But income tax is slightly different from what we actually prepare our book of accounts. Now, in this, some expenses may be of such nature that is not related to the business. Supposingly, by chance, you have such kind of income which is not directly related to the business. For example, you have certain rent from the building. So giving a building on rent is not a business income. But when we prepare the P&L account, we actually write the rent here as our incomes. Or we may have income from the bank interest. Again, it is not related to the P&L account. Oh, sorry, it is again not related to the PGBP. That is, it is not your business or profession income. So how do we actually, and it is not just related to the incomes, but there may be certain kind of expenses which has been debited, but it is actually not related to the business. Supposingly, if we have debited the household income or household expenses, then it is not the business income. It is not the business expense which you have subtracted. Okay, so certain adjustments we need to do with regard to our P&L account. Now, what does income tax says? Income tax says in order to calculate the PGBP income, we have to subtract the business expenses from the business income. Okay, this is the only format which we need to follow. We have to only consider what is the business income and what is the business expense. Only these two things has to be taken care of. Only then income from PGBP will be calculated. So in the question also, you might be given certain information which is not related to the business, certain income or certain expenses. So we have to do the adjustments accordingly. Fine. So first of all, we have to start with profit as per P&L account, right? Our next step will be add expenses which are wrongly debited to P&L account. Now, what does this mean? Let us just try to understand with the help of example. Now, supposingly this is a P&L account of a firm and you have certain expenses. So on the debit side, we have expenses. My first expense is business expense, which is 1,70,000. My other expense which is written in the P&L account is personal expense, which is 50,000. Okay. And I have gross profit brought down, which is rupees 3 lakh. So can you tell me what is the net profit of the firm? So the net profit is how much? 80,000, right? Now this is the P&L account of a firm or a company or any business, okay? Now, don't you think that there is certain kind of mistake in this P&L account? There is a mistake that personal expenses has been debited. But income tax says we have to consider only those expenses or incomes which are related to the business only. Now, supposingly if these personal expenses are not debited here, then what would have been the net profit of the firm? So what should be the net profit as per income tax? So if the business income is, the format says we have to subtract the business expenses from the business income. Okay, the business income is 3 lakh and the business expenses 1,70,000. So I simply subtract 1,70,000 from 3 lakh. So I arrive at PGBP, that is 1,30,000. This is the simplest way. But this is not the format which we need to follow. The format is that we have to do the calculations as per the procedure specified in section 29. Okay, so we start with the net profit as per P&L account. So the net profit as per P&L account is 80,000. Okay, so just a minute back I asked you that if this personal expense would not have been debited to the P&L account, then what would have been the net profit? Okay, so you must have said that this 50,000 would not have been subtracted. That means my this net profit would have been up with more 50,000. So it would have been more by 50,000. So we add it. Okay, try to understand this, that we need to do the adjustment with regard to expenses which are wrongly debited. This personal expense is wrongly debited, is wrongly subtracted, so we need to correct our net profit. So which is wrongly debited or which is wrongly subtracted from the net profit, we have to add back and we need to adjust our net profit. Okay, so this 50,000 which is a personal expense, so our format says the net profit as per P&L account, add expenses wrongly debited to P&L account. So wrongly debited expenses, my personal expense. So what is the correct PGBP income? That is 1,30,000. This 1,30,000 is actually your correct income from business and profession. So this was one of the adjustment, which I told you what it is. Add the expenses which are wrongly debited to P&L account, which are wrongly subtracted from the P&L account. Okay, those expenses you have to add back. Fine. Now coming back to the format, started with P&L account, profits as per P&L account, add expenses which are wrongly debited to P&L account, which we just did the example of household expense or the personal expense. Fine. Another thing is we need to subtract incomes which are wrongly credited to P&L account. Okay, here we have done what? We have added the expenses which are wrongly debited to P&L account. Here we are going to subtract the incomes which are wrongly credited to P&L account. Let us just again take an example. For example, we have expenses, and in the expenses I have business expense amounting to rupees 2 lakh, and my gross profit brought down is rupees 5 lakh. Okay, and I have interest from bank also. So I have certain amount of money in the bank on which I earn the interest. Now this interest is actually, if you see all the five heads is income from salary, income from house property, income from PGBP, income from capital gains, and income from other sources. Now if you see, this interest on bank is neither your salary income, neither your house property income. Of course it is not a business income, not a capital gain. So that means this is income from other sources, which has been added, which has been credited to the P&L account. Now this income is wrongly credited. That means it is correct as per the P&L account, but from the point of view of income tax calculation, this is not correct. Okay, so this wrong income which is credited to the P&L account, we will have to do the adjustment of the same. So that means my net profit is rupees 4 lakh. Okay, now how do we have to do the adjustments of incomes which are wrongly credited to the P&L account? Again, we have to follow the procedure of section 29, which says to start with the net profit as per P&L account, which is given here. It is rupees 4 lakh. Fine. And we need to subtract the incomes which are wrongly credited to P&L account. So I have subtracted rupees 1 lakh from here. Okay. So my net profit is rupees 3 lakh. Earlier it was 4 lakh, but correct profit as per income tax calculation according to section 29 is rupees 3 lakh. Correct. Again, moving forward. So the method of computation says profit as per P&L account, whatever amount is given, from that amount you need to add the expenses which are wrongly debited to P&L account. You need to subtract the incomes which are wrongly credited to P&L account. Along with these two, we have two more things. One is where you need to add. This is the first item which we need to add, that is expenses which are wrongly debited to P&L account. Another is incomes which has to be credited to P&L account but actually not credited. That means those incomes which were of business nature, they should be credited to the P&L account. That means to the profit it should be added. That means it should be credited. Okay, but are not credited. So if you remember, in the last lecture I discussed section 28, all those incomes which are related to PGBP. So all those incomes would be covered here. Okay, so that means incomes which needed to be added were not credited will be actually credited. That means which will be actually added to the profit. Okay, and another thing is, along with the subtraction of incomes which are only credited to the P&L account, we actually have to do the deduction of the expenses which needed to be deducted. That means one expenses you have deducted this which were wrongly done, but one are those expenses which needed to be done. Okay, these are those expenses which are expressly allowed as deduction. Okay, so this will be your PGBP income. So I'm repeating once again, method of computation as per section 29 is, you will be given with the profit and loss account, a profit as per P&L account. From this amount only we need to start. We have to add the expenses which are wrongly debited to P&L account. To that we have to add the incomes which need to be credited to the P&L account but are actually not credited, right? And from that you have to subtract the incomes which are wrongly credited to the P&L account. The example of bank interest income which we did, and we need to subtract the expenses which were actually needed to be subtracted and are actually not debited. So when you compete with these adjustments, we arrive at our PGBP income. Okay, so when I discussed of expenses which actually needed to be subtracted, I was actually talking of these deductions. So out of these deductions, that is from section 30 to 36, in one of the lectures I have completed with section 30 and 31. So these deductions are related to these sections. Section 30 deals with expense related to building. Section 31 deals with expense related to plant and machinery or furniture. Section 32 deals with depreciation, which is a full-fledged separate topic and is a quite vast topic. I'll make a separate video of it. Then we have section 35, expenditure on scientific research, section 36, which are other deductions, and section 37, which are general deductions. So in the coming lectures, I would be covering with expenditure on scientific research. Okay, so I am again requesting you to make notes side by side. Thank you very much.